My team will be joining briefly to support in answering your questions on the chats and also in the Q&A. And I think for the purposes of this platform, from what I've seen in the past sensitizations, it has always been the direction and the guidance that kindly place your questions in the Q&A. I know there's a chat aspect of it, and there's also the Q&A. So for ease of feedback from also our team, kindly post your questions on the Q&A part of the Zoom through the sensitization. I can see our attendance is a bit low. So I don't know if with your indulgence, we can just give an additional 5 minutes for taxpayers to join in. Why I make this request is because on our end, we have a few key announcements we'd like to make today in terms of some of the items we have fixed last night. And then I think it's also key so because it also eases your filing journey. So maybe we could just start the sensitization at around 9:20 with your indulgence kindly. Thank you.
Recording in progress.
like to just mention a few of my colleagues who will be joining us for purposes of this sensitization and will be assisting with your answering your questions on the Q&A platform. I'm joined by my colleague Lima Sereti from the Business Transformation Office, and also Fiona Omondi. I think if they've already joined, they will be made. I'm requesting for them to be made a panelist so they can assist with the Q&A. Also from the eTeams Operations Office, which is they sit at JQuat Towers. I'm joined by Zainab Kadenge and I think her team. I know we are split between those who are offering assistance in the office and also who are, and then of course those who are joining us for purposes of this sensitization. Now, just a few guidelines I'd like to start with. With the purposes, with the VAT auto-populated return, there are key items that you need to require and you need to have them at hand when it comes to a reference point in terms of the system error messages that you might be encountering while you're filing your return. And then, of course, a guideline on how to actually use the VAT auto-populated return. Now, all this, just a minute, allow me to share my screen. If Ngao, you could confirm my screen is visible.
Yes, your screen is visible. Just need to close the chat so that it may be a bit large.
So you can't see my, I've
I can
shifted my
actually
page.
see. I can actually see it. I'm just requesting you close the chat, the participants part.
Okay.
It's okay. It's okay now.
Can you see my Chrome page?
Yes, yes, yes.
Okay, fantastic. So I just want to access our KRA website. Just a minute. Now, the tools of trade, or rather the documentation that you will require that offer guidance or offer clarity on the VAT auto-populated return are actually published on our website. So I've just accessed our website. If you go to publications right there, reports, guides, and manuals, I'd go to page 3 specifically. And on page 3 is where I have the pre-populated VAT return step-by-step guide. You can see it here. We published it on 28th November 2023. And if we click download, you have access to the same guide. So this is in the public domain. It's published and available on our website. It gives you a proper tutorial of a full 360 scope of the VAT populated return and the CSV files that will be availed to you, and in terms of the VAT return itself, the total amount. So it's quite detailed. It's about 13 pages. It's actually 13 pages, and it gives a proper step-by-step process. So that is the first document I wanted to show you where it is actually available. Then again, if you go to publications and go to tax education right there, the first document, okay, now it's the second one. The second document that we published on 9th July 2024 is on the FAQ. For the FAQ, we have published two different documents. One is detailed. The detailed one carries now the screenshots of the different system messages you might encounter while you're filing the VAT auto-populated return. Then there is a summarized one with just basically a Q&A question, which is for someone who's maybe has more experience with the system and knows how to navigate the error messages, but they just want a brief explanation on some of the FAQs. That is also available. So this one is the one that is a bit more detailed. This one that was published on 9th July 2024. Again, if I download it, you can see it's about 11 pages. And I believe this is where I want to place a lot of emphasis on. This is actually a really well thought out document in terms of the screenshots, or rather the messages you will encounter at the point of filing the VAT return. So you can see the screenshots are there, the different system messages you might encounter for the different sheets in the VAT return, and how to navigate them. So it's really quite detailed. Again, this document is also 11 pages long. So it's important to have a sit down with, or rather just to have them at your disposal, and it will assist with some of the queries or challenges you might be encountering while filing the VAT return. So those are the two documents I really wanted to emphasize on when it comes to the VAT pre-populated return. Just a minute. I want to check something else. Now, there's another document I want to draw your attention to. I've just used the word list and searched on the website. It's this one, list of goods services listed in the first, second schedule of the VAT Act. Why I am emphasizing on this particular document which we published is because there has been a lot of challenges for taxpayers where they are having some of their sales in terms of zero-rated sales populated as exempt sales, and other exempt sales. Okay, ideally they expected it to be an exempt sale, but it has come as zero rated. The reason as to that is not the error in that is not actually on our end. It is how the configuration has been done on your end in terms of the device. So what is currently happening, you have done incorrect mapping of your HS code. So just for purposes of proper guidance on the HS codes, which is what I have clicked and downloaded, here is a detailed document. It's actually 15 pages long. And when I talk about HS codes, I'm actually addressing this. So when you do incorrect mapping of your HS codes, you're having your data populated in different sheets. So we deliver it as transmitted. And I need to emphasize this a lot. You really need to have a discussion with your device supplier on the configurations and on the mapping of the HS codes so that this is corrected moving forward. I know for those who participated in the pilot exercises that we've done in the past few months, we did one for the July 2024 return and another one for the September 2024 return. This was brought out as part of our feedback from that pilot exercise. So I know for them, I know they might have benefited in the same, but that's notwithstanding, since the auto-populated return has always been available on the iTax portal for the better part of this year. And I'm looking at February 2024, because I know there's a fix we were doing in January 2024. So from February 2024 to date, the auto-populated return with the respective CSV files has always been available on the iTax portal. We have not availed this data now that we've done the switch on. What we've just done the activation on is the validation rules. And now which now bring us to why we are having these sensitizations, and we've been having these sensitizations from last week, and we will continue having them till tomorrow afternoon. So those are the three key documents I really need taxpayers to be aware of, and they are available on our website. So I'll just move from that introduction and go straight to giving you a walkthrough of how you access the VAT auto-populated return. So I'm accessing this through our test environment. This is not production, it is not the live environment. So this is the landing page of your iTax portal once you log in. Since you want to file the VAT return, you will go to the returns menu, file return, and then you select the obligation that you would want. I'm just using this as a sample, but we will use different data for the purposes of the journey on the filing of the VAT auto-populated return. Now, the second, after you select the tax obligation, which is VAT, it takes you to this next page. Now, you'll realize that the VAT, the tab for accessing the VAT auto-populated return is actually here. It's in black, which is indicated download auto-populated VAT return. There is also availability of the normal VAT return, the blank one, here in the hyperlinks that are here written, click here. So depending on the version that is compatible to your machine, you would actually use any. So let me just open this, for example. The download is done. So you can see if I use that hyperlink, this particular link does not avail any CSVs for me. So it only gives me a return. So if I open this return, for example, enable editing, and then of course enable content. Always ensure that this pop-up is there. Please do not cut and paste any values in the workbook so that you have a proper return. If it does not actually give you this pop-up, just know that you'll encounter some challenges with that return, depending on the settings you have in your machine in terms of the Excel. So if I say okay, you'll realize this particular return is blank. There is no pre-filling that has been done. You are allowed to use the same return. The validation rules that we have put in place will still work on this return. The only difference is we have not done any pre-filling in terms of your lump sums for sales section B, section D1, and section E. We have also not done any pre-filling in terms of sheet O for where we have VAT due for purposes of the credits brought forward from the previous tax period. And we've not done any pre-filling of the withholding VAT credits. So this is just basically a blank return. This return is also available on our website as well, but no one is, we are not saying you cannot use it. I just feel from where we sit, it might be a bit more difficult using this particular return, owing to the fact that you have another source return on the VAT auto-populated return that reduces the journey on what you're supposed to declare in your VAT return. So it is available, yes, you can use it if you feel you're comfortable using that. However, I feel like it would make your journey a bit, it wouldn't be as seamless if you were to use the VAT auto-populated return. The auto-populated return gives you a starting point of what is expected for you to file in that particular tax period. So the return is there, but remember the validation rules that we have actually switched on will still apply even if you use this and you're using your own data. So I'll just close it because I don't want to use that. Now, the focus I want us to have is here. Download VAT auto-populated, download auto-populated VAT return. So if I was to click this part, it prompts you, do you want to download the pre-filled form? So you say, okay. So the download is complete and it is there. I'll not open this because this is data for a specific taxpayer. I'll not be using the same. So basically, maybe what I can show you is how it looks like. So the return is there. Their VAT return is there. I'll not open that. And then now the respective CSVs for that particular taxpayer are also there. So you can already tell there's a difference by using the hyperlink for just the blank return because there are no CSVs being availed. and when you use the auto-populated VAT return, there is already a difference. So I'll just close this data and go to the data I intend to use for the purposes of this training. So this is my return, and this is what I'll be using for purposes of, just a minute. So this is how the auto-populated return is. I want to give you a walkthrough. I'll give you a walkthrough of each and every sheet, and maybe also address the challenges you might be encountering when you're filing your return and how best to address them. Now, on the basic information page, your PIN will be pre-filled. The type of return will be pre-filled. It's the November 2024 return, so it's an original return. The entity type is head office. The return period from is 1st November 2024. Now you'll realize the return period 2 is not pre-filled for you. The reason as to why we have done this delivery in that format is because, as you can see, as we just opening the VAT return, you have sheet C available for you, which is supposed to allow you to declare other rated sales supplies. You have also sheet G here, other rated purchases. Now, as you are aware, the Finance Act 2023 brought the removal of other rated supplies which were being taxed at 8%. Since we do not deliver as a return for every finance exchange, we usually maintain one return for all for the purposes of filing. For the purposes of filing the VAT return, what happens is we usually leave this part blank so that it triggers the different sheets you need to use. So for example, I'm filing the November 2024 return. So if I capture the end date as 30th November 2024, sheet C is no longer available for taxpayers, and also sheet G is also not available for taxpayers. Again, other rated supplies are not applicable in November 2024. However, if I was filing, for example, a return for, let's work with January 2023, you can already see sheet C has been populated again, because in January 2023, other rated supplies were applicable. So in the aspect of maybe a compliance has been done, you have been noted that you were supposed to have been registered for VAT a few years ago, and
This meeting is being recorded.
And now that needs you to be registered for VAT. So the backdating will be done so that you start filing returns maybe from, let's say, January 2023. Maybe withholding VAT had been applied on your PIN, and that declaration needs to be done. So when we do the backdating in terms of the obligation, and we're taking it back to January, for example, January 2023, the return is still available for you to file other rated supplies if they were applicable to you at that time, but for now it is not applicable. So I'll just capture the correct tax period, which is our focus for this sensitization. And again, as you can see, sheet C and G have also been removed. Now, let's have a look at sheet B. You can see what is already pre-filled. We have about 7 million that is pre-filled. Now, these transactions, the lump sum here, relate to B2C transactions. So what do we mean by B2C transactions? You have sales that you have made a sale, one, to someone who is not registered for VAT. Ideally, you do not, it is not an expectation from our end that you import that particular sale in the return. So it will be included in your lump sum amount. You have made a sale, for example, you could even have done a sale to someone who is registered for VAT, but at the point of you issuing that invoice, you captured their invoice wrongly, in the sense that the PIN that you actually captured at the point of invoicing is not a valid KRA PIN. So for such transactions, we usually move them to the B2C lump sum, or rather the CSV itself, because at the point of, you cannot declare a PIN that is not valid in our registry, that is not even found in our registry. So depending on the different scenarios for a B2C transaction, we usually pre-fill the total lump sum amount in section B. Now that information, the detailed information, like now the breakdown of the full 7 million, will be found in this sheet, in this CSV. This one, section B, without PIN and non-VAT. So for purposes of reconciliation on your end, what will happen is you can open it just to ensure and confirm all your sales to a B2C, for a B2C transaction, have been auto-populated for you. Remember, the baseline of the VAT auto-populated is 1, transmission. So as long as the invoices have been transmitted and transmitted correctly, then those CSVs and the invoices will be availed to you while you're accessing the auto-populated return. So this CSV is available to you. You can open it and do your own reconciliation. When I say this, you're doing a reconciliation with your ERP systems. Look at the data that you have in your own systems and just ensure that the same has been accounted for in the lump sum. If there is a discrepancy in terms of transmission, maybe you made a sale, it has not yet been transmitted, and you need to do your filing, then remember you are mandated and expected to adjust your sales upwards on the lump sum part. So if you have an invoice, yes, but transmission was not yet done, for whatever reason, transmission has not been done, then the adjustment will be done here. For example, I can adjust this to about 15 million, just to accommodate the additional sales that have not been auto-populated in the return based because of transmission. Now, I know there has been some conversations in the past few sensitizations where the position, or rather the challenges our taxpayers are experiencing is, if you check that particular invoice in the invoice checker, it is there, but for when you come to the auto-populated return, those specific invoices are missing in your CSV files. Now, for someone who wants to declare their sales, you remember you can increase your sales on the lump sum. I believe now what we are addressing, and I think I've just gotten the confirmation this morning, I think just before this sensitization, that we are supposed to guide all our taxpayers to confirm that all their invoices are now available. That particular challenge has been resolved, I think just this morning, maybe an hour ago. But for you to do the confirmation, you cannot rely on data that you had already downloaded. So what do I mean? If you had already downloaded your VAT auto-populated return, maybe yesterday or even at the beginning of the month, and you're not yet, you haven't filed your return, the update of what we have done, or rather availing of the invoices, would happen on the application, on the iTax application. That means you would have to go back, log in, and download your VAT auto-populated return. And for those of us who are joining and actually participate in the filing journey of maybe the company returns, I would even want you just to, as we take you through the sensitization this morning, you download the VAT return and do a walkthrough. As I take you through the journey of filing, you also do your own walkthrough as you're looking at your data. So that has been resolved this morning. And I'd appreciate if the taxpayers who are joining us can also confirm, who are actually encountering that as a challenge, can confirm the same as we progress with the sensitization, or rather with the training. So for the sales invoices that have not been transmitted, remember you make the adjustment on the lump sum. Please do not introduce those sales as a line item, because we are doing validation against what has been transmitted. So if you have a B2B transaction, which is mean I am registered for VAT, I made a sale to someone else who's also registered for VAT. So those are the sales transactions that we usually import the CSV, which I'll just do right now and show you how to go about it, and also show you a different way of how to import that CSV, especially for taxpayers who are having large volume invoices. We're looking at 5,000 and above, to 20,000, to 50,000, or to 60,000 invoices. So when you need to import such a huge CSV, I know there's the system might not the system, but rather the return might be taking a bit of time to remove the pipe character that we have introduced in your CSV, so that the invoice numbers do not truncate. So let me just open section B with VAT pin 1. So this is how my data set looks like, for example. And as you can see, the CSV that I have prepared has 1,025 invoices. I would want to just comment on column E. Now we keep on talking about the pipe character. So the pipe character is actually this first character before the 4. The reason why we introduced this in all your invoices is just to facilitate the invoice numbers from truncating, right? So if I was to delete it, it would truncate in that format. This is how now becomes the new format of the invoice number. If you import this CSV, exactly the way it is, you will have a challenge because this is not a proper format for our invoice numbers. So I'll just undo that. I know I'd like just to make a comment for, because I know this sensitization is for all our taxpayers. For the taxpayers who are based in LTO and MTO who have large volumes, I know you have been I know there's a possibility you've been encountering at the point of you importing this CSV in your return, the system removes the pipe characters maybe for the first 500. So if I'm looking at this particular one, it would remove up to 500, and then the balance is imported with the pipe. So when you go to submit or validate your return, you're getting error messages of the balance 500. Remember, in the VAT return, this is the CSV, but in the VAT return, this particular pipe is not a recognized character for the column of the invoice number. So I just want to show you a workaround for purposes of this training, how best maybe you can import this CSV. Now I'll open Notepad++. If you have it in your machine, then this is what this is a workaround for importing large volume invoices in your VAT return. Now I'll go to File here. I open. You need to access the CSV where you have saved it. So I've saved it here, section B with VAT pin 1. This is the CSV I want to import. Now, if I import that, it populates for me all my data from the CSV. Now, if I press Control Find, that is what populates. I want to do a replacement. So it asks me find what? I want to find the pipe itself. So find pipe. This is just an alternative way of doing it. It is not a must you follow it. Everybody, I think, has their own system of how they import their CSV, but I just felt it is important to maybe share a different route. So find what, and then now I've put in the pipe character, then replace with what? So I want to replace with nothing. So I'll just put blank, nothing is there, then replace all. You'll notice something will happen to the notepad after I click replace all. You can see there's a shift even in the data. There's a movement in the data. So once I click replace all, you realize here, just where my cursor is, the pipe that was there before is no longer there. So then I close that document and then I save. I click save there. So what will happen? My CSV has saved. What I want to discourage you from doing is reopening it. If I reopen it, the invoice numbers have all truncated. So what I want to do, I want to import it as is immediately. You see the number of minutes it has just taken just importing that CSV. So the CSV has already been imported and the pipe has also been removed. So that's just another way of removing the pipe character when importing your CSV. This ensures that your CSV, you have confirmed that the information there is correct. So that's just another workaround of just doing a faster importation of your CSV, especially for our taxpayers who have large volume invoices. We're looking at numbers as that extend to even 60,000 invoices. Now, I want to draw caution to something we've also noted while you're importing. Now, for this is a taxpayer who is not necessarily using our data, but they are using their data. So you're importing your CSVs. There's something that you're introducing in your invoice numbers, which is we're calling it a lagging space. Now, if you introduce a lagging space before or after the invoice, so there's a space here. I've just moved my cursor. You can see at the very top, or just here where you create another lagging space, depending on how you're preparing your invoices for purposes of importing. If you introduce a lagging space in any of these particular fields, you see this dialog box that is here. I'm moving it. It's placed on the cell for invoice number. It gives you a guidance of what is allowable in the return. So for this particular dialog box under invoice number, it tells you alphanumeric. So what do we mean by alphanumeric values? So we are looking at enter alphanumeric values of less than or equal to 40 characters. The special characters that are allowed in a particular cell are space, comma, and then a hyphen, a slash, or a full colon. Those are the ones allowed. However, lagging spaces will prevent you from properly filing your returns. That issue we're experiencing, and I think that is why most of your invoices are being flagged on sales, because the characters we are also introducing in the return are not aligned to the dialog boxes we have presented to you as a guidance. I have moved it to invoice date. It gives you the proper date format of an invoice date. So what do I mean? For example, if your invoice is for 1st November 2024, ensure that the number one has 0 preceding before it, because the proper format is DD/MM/YYYY. So that format has to be aligned as per the return. So those are the small things that I actually, from all the issues we have received thus far, where we are seeing that it is not a challenge on our end. It's just on the proper presentation of your CSV files, and how you're actually capturing the same data when it comes to importing. Remember, the validation rules still apply. If I go to this part, again, the dialog box, it guides you on what you're supposed to capture in that particular cell. If it is the name of purchaser, the same applies. If it is a pin of purchaser, the same applies. I don't expect you to have a challenge for the pin of purchaser and name of purchaser in sales. I know where you might encounter a challenge is in purchases, because when we receive your data for purchases, when we're looking at the pin of supplier, we auto-populate for you that the name of the supplier as transmitted to KRA. we do not pre-fill the name for you. So if a mistake was done at source when invoicing and a character that does not align with the VAT return is transmitted and auto-populated for you, then that would also pose a challenge. So those are the small things that you look at when you're also filing, or rather uploading your CSV files. So I've already done for section B, but I'd like to make a comment on this section B. Let's look at the rules. B2B transactions, you are importing a CSV file that the invoices have been transmitted and availed to you. I think I need to add that part, and availed to you in the auto-populated return. Now, if there is an aspect where that invoice has not been transmitted, you ensure you capture that taxable amount and a lump sum. Where do we get the lump sum? The lump sum is where I have placed my cursor, and you can see it reads 15 million. That is where the adjustment is made. Now, I'd want to make a comment for our larger taxpayers, the guys who are having invoices of up to 5,000, 7,000, 10,000 B2B transaction. You have the flexibility and the luxury of reducing the number of invoices that you are importing. And I want to say that is the guidance I want to give. I actually would want you to quote me on it. Why I'm saying that, I've given you a workaround of how to quickly import the CSV. But at the point of now you submitting the return, I think I've encountered that with a few of the taxpayers I've been assisting to walk this journey with. When you go to the return, when you're submitting that return, the validations that are being done by the system, take an example of I have 60,000 invoices under B2B. B2B is this, what I've imported. I have 60,000 invoices. The system is validating every single line item. So it will validate and check any alterations that have been done on every single line item. So we are looking at a total of 60,000 line items. So I know that is the challenge when it comes when you're trying to submit the return. The system is rotating and rotating, and it gets to a point where it times out with an error 170, error 173. They're a bit long characters. So this is the guidance I would want to give. Reduce your invoices that you're importing in the B2B CSV. So for example, if I have 60,000 invoices, those are my sales for November 2024. As we work on the performance, so this is the workaround I would want to advise. And it is also the same solution, a taxpayer who has more than 75,000 invoices, because that's the capacity of the return. I actually have a taxpayer who has 1 million B2B transactions in our registry as we speak. And it is not possible to import 1 million invoices in the return for Section B. So ideally, what has always been a norm, and this is not something that has even come with the auto-populated return, it has always been there with the VAT-3 return, because the maximum capacity of the return is 75,000. What I would advise is import 1,000 invoices, and actually I would even recommend original invoices. Then the balance of the invoices, put it in the lump sum amount. It should actually offer assistance or a better journey in terms of filing when it comes to now submitting the return on the iTax application. Because I know that check of now going line by line, 60,000, it finishes with your Section B, it goes to your Section D1. If you have exports, it goes and does the same validations in Section D2. Once it's done, if you have exempt sales, it goes to Section E. It actually validates each and every invoice, line to line, just to confirm there has been no alterations when it comes to the PIN, when it comes to the taxable amount, when it comes to the actual invoice number, is it ITIMS compliant, when it also comes to the invoice date. So my recommendation and my your quickest win as a taxpayer is just doing a shift from now importing it from B2B, and then now just putting the variance, or rather the balance of your B2B transaction as a lump sum transaction in your B2C lump sum amount. It actually will be a better help when it comes to now submitting the return. I know you'll not experience it at the point of importing the CSV, but I know the validations we've put in place in the system, just going line by line, because I know we will validate this particular cell. Let me just scroll up. We will validate this particular column E. We will also validate the invoice dates just to confirm there has been no alterations on the same. For taxable value, we also do the validation as well, just to ensure there is no under declaration. And also for the PIN, we also do the validations as well in the back end. So I think that's a guidance I would want to offer for our taxpayers. And then now, a quick mention for your debit notes. I know you are receiving debit notes in your CSV files. Your debit notes are appearing in both your sales and your purchases. So allow me just to address the debit note situation in sales. So in your auto-populated return, what is happening? Let me use this as an example. So all these are credit notes. But now what you're finding in your data sets, this could be an original invoice or it could be a debit note. Both of them carry a positive taxable amount. So when that data is availed to you in your sales, there is, for some, not for all, for some, a relevant invoice number has been also availed to you that references where the debit note was raised against, and also a relevant invoice date. Now, if you look at how our return is, any positive taxable amount ideally should not have a relevant invoice number and should not have a relevant invoice date. So in your CSV file, I'll document it better when I'm doing section F. In your CSV file, you will manually delete these transactions from your B2B transactions and declare the same, add it in your lump sum. Because the system, if you import it, if you manually delete the relevant invoice number and you manually delete the relevant invoice date and import that debit note in your B2B transaction, the system will still come and ask you for you to declare the original invoice and the original date. So to avoid that, or rather a workaround on that, is as we deliver a permanent fix later after the return filing, I want you to shift those particular debit notes. And by shifting, I mean you're no longer importing it. You're no longer importing those invoices on your B2B transactions. You are actually doing the declaration of the same in your lump sum. Remember, the goal is at the end of it all, your total sales should not be under declared. So whether you're importing the CSV or you're capturing it in your lump sum, if the expectation of what we have received by the time you're going to file your return, you've downloaded it and you want to file, is 500 million, that is what you will declare. You cannot declare an amount lower than that. So if there's a challenge, and I'm addressing specifically debit notes, because I know what we delivered last night resolves this issue for debit notes in section F, which is purchases. But for sales, because we have a workaround where you can make the declaration on the lump sum, please ensure you do the declaration there. It will ensure that some of the error messages you're getting relating to debit notes under sales is resolved. So currently, that is the workaround for debit notes. I know the same has been communicated once you visit our offices at JQR Towers, or if you're visiting your TSOs or sending emails to your account managers. So that is the workaround for debit notes specifically. I've already taken you through the validation rules for sales. You cannot under declare. You can increase your sales, and where to increase your sales, you do it on the lump sum B2C transactions, which is here. That is where you make the adjustment. That is where you increase your sales. So remember, the responsibility for correct declaration still lies with you, and it also is pegged on that the basis that you did proper invoicing and transmission. I'm saying that because I think I've seen a few before I started presenting. I saw a few comments on the challenges on amounts that are higher. We have already documented this, yes, but the issue stems with how your configuration has been done and transmission. We have found taxpayers are transmitting more than once our control unit invoice number. So you're finding, for example, if it's this particular invoice that ends with 22310, it has been transmitted more than once. So it has been transmitted twice. It has been transmitted 3 times. That issue is not stemming from us. So we have availed the same. What we are actually doing on our side, we are trying to provide you with a quick data fix in just dropping the extra duplicate invoices. That is the fix we are providing, because now the mistake has already been done at source, which was at the point of transmission, where the transmission where we transmitted that particular invoice more than once. And that is why now we are having a challenge, or rather the comments I've seen. Actually, I've seen one comment from one particular lady where the aspect is we have not addressed our issues, and that is not the correct position, and I don't want us to take that position. The position is not that we have not corrected it. It's at source, the configurations, and transmission has been done in duplicates. So actually we are working around the clock, ensuring that now we update for the invoices. Not all invoices are affected, just a few have been affected. And I think we have seen that it's on both teams and e-teams invoices, where now that amount has been inflated. Your taxable amount has been inflated. So depending on the number of times you transmitted that particular invoice. So I'd want us to take this sensitization and encourage you to actually resolve that issue at source, because it will keep on reoccurring as we continue using the auto-populated return to file our returns. The solution is not to issue for that particular scenario. Let me emphasize, for that particular scenario, I don't want to say the solution is for you to issue a credit note. No, I would want, we are working with our team that is actually handling monitoring the auto-populated return challenges. We are trying to provide you with a fix for a mistake that has happened at source. But the moving forward, it needs to be resolved at your point of how you're doing your transmission. Please, let's have discussions with our suppliers, our device suppliers, so that we ensure proper transmission is being done at source, where we are not having duplicates, and so that you're not getting a feeling that your taxable amounts or your final position in terms of output VAT has been inflated. So we are going, not I think, we should provide that solution today, where now we give you a proper taxable amount, but this is specifically where duplication has happened, and it has happened at source. At source, it is not at the point of us receiving the data we are availing duplicate amounts. No, it is just how the transmission has been done. So we are trying to actually give or provide a bandage for a mistake that has already happened at source. So let's really have conversations with our device suppliers as to resolve this particular challenge. So that is what I want to just touch on when it comes to section B, and just the different guidelines on how to maneuver when you're trying to file your returns. The beauty with sales is you have the aspect or the field for lump sum, so you can move your sales and declare them under the lump sum cell, for lack of a better word, for B2C transactions. There's a concern whether if you declare your sales under lump sum, will your purchasers be able to claim the same invoices? The answer is yes. We are not currently, the system is not currently validating, or rather facilitating claiming of input VAT from purchases based on how the declaration has been done in sales. That one only applies for DST taxpayers. It is unique to DST taxpayers. But for every other taxpayer who is not a DST taxpayer, they will still be able to claim that purchase because we are validating from how that invoice has been transmitted and not how that invoice has been declared in the VAT return. So just for purposes of clarity, that needs to come out clearly. Now, since I've mentioned DST taxpayers, the uniqueness with the DST taxpayer is purely that they have to file that return and file it as a line item for you to receive that CSV as a purchaser. So that is the only interlinking or reliance that we have done when it comes to claiming of input VAT. So let's proceed on. I think I've taken quite some time there, but I wanted to just overemphasize on the messages and how you can error messages you're encountering when you're filing your return, and just to show you that it is possible to file your returns, right? Now, for zero rated, Section D carries two particular sections that are worthy of mentioning. Now, you have D1, which is for local or exempt availed. And then you have D2, when now we're looking at exports. For exports, it is a bit different from the rest when it comes to sales. Exports does not have the luxury of a lump sum field. That means you have to import that CSV. There is no workaround on it. You have to import the same way as Section F, you have to import that CSV. The same applies with exports. So I just want to take you through importing a CSV for Section D1. You can see here under type of sales, you have two categories, local and exemption. Now, if I choose local, all the fields in the return, all the columns up to Section J, which holds the taxable value, should actually be captured. Remember, if you don't have so many transactions, you can capture your transactions manually in the return. You don't have to import a CSV. But if you have you select exemption, if you select exemption, you can see column B has already been grayed out, which is the pin of purchaser. But then column H and I opens up because you need to declare them. You need to declare the relevant paragraph, and you also need to declare the exemption certificate number. The major questions we've gotten around Section D1 is now, when you're doing business with an exempt body, how do you handle those invoices? And the response has always been, and the norm, even without the auto-populated return, if at the point of you making that sale to that exempt body, they had no exemption, then that particular supply is still taxable. And ideally, you should actually issue them with an invoice that has charged VAT at 16%, depending on the supply you're making. Once the exemption has been granted to them, and remember, this exemption is not a blanket exemption, it is usually pegged on maybe a specific item. So what happens is, once they avail the same exemption certificate to you, you will go back and issue a credit or raise a credit note to cancel that particular invoice that you issued them at 16%. Then you reissue them now with a new invoice that is at zero rate because of the exemption certificate number, so that when you're making the new declaration, you will be able to capture the exemption certificate number in your return. Now, I'll just import my CSV for Section D1 with VAT PIN. My transactions were not many, so it's the importation has already happened. You can see, because my type of sale is local, column H and I have been grayed out, but my taxable value amounts have already been captured. So if I had an exemption, the difference would be I would not capture the PIN of the purchaser, but I would have to capture the relevant paragraph and the exemption certificate number. So those are the key things under Section D1. Now, I want to just do a demonstration of Section D2. Allow me first to just open my CSV file for Section D2. So this is how it has been availed. I think I pre-saved it, so it changed a bit. So before this, column A, B were blank. Now, I would want to just import this CSV as is in the return, so that I explain where I'm coming from. It gives clarity on, I think I saw that challenge a taxpayer had raised it yesterday, that we have availed exports CSVs, but they are not compatible at the point of importing. So let me just import it. You can see that pop up. Please select a proper CSV file for this schedule. Now, let me explain why that message is coming up. I'll just go back, open my export CSV, and I want you to look at how I'm aligning it to the return. You can see column A has the ETR serial number captured there. However, if you go to the return itself, section section D2, column A has the PIN of purchaser. Column B has the name of the purchaser. Then you have the ETR serial number. So already, why it's saying it's not compatible, because the CSV you're importing is not aligned to the return. And now that is what I want us to change. I'll just introduce 2 columns here so that I align it to the return as is. So A is PIN of purchaser. B is the name. C is now the ETR serial number, and then you have F, which is pre-filled in the return. Let's go back and have a look. F is type of exports. Now, for type of exports, you have 2 options. You're either exporting a good or you're exporting a service. If you select good, for example, in the CSV, because I know there are some columns we have not filled for you. So that's what I just want to guide so that you know how to best go about it. So I need to capture column F in my CSV and ensure how you're capturing it in terms of the caps aligns to how the return is. So you can see my G is capital in the return and it has the word S at the end for goods. Services has the same. Services is capital S and ends with S. So when I go back to my CSV, I go to section F, I'll declare, let me just use services for purposes of this training. Both of them are services. Now, there's another column that is a requirement when you're dealing with services. Let me pick services. I'll go back to goods in a minute. You can see the minute I pick services, column H is grayed out, meaning it is not a mandatory field. Column I is grayed out, meaning it's also not a mandatory field, and J is grayed out. So the other column I need to actually capture is column K, which is mandatory. K is the relevant paragraph. These have also been defined in the return here, README. You can see this sheet just before errors. That is where the definition you'll find for relevant paragraph. So I'll just go back to column K here in my CSV and capture again how we have done in terms of caps in the return, ensure it aligns. So it is capital A for category, and then space, and then capital A. I'll choose A. And then now I autofill the other one. Now, as the CSV stands like this, the way it is still not yet ready. I want to show you. Now, for this particular taxpayer, the case, the data I created, they did an export outside the country. Now, remember, for exports, you can have a scenario whereby you have done a sale to someone who is in the EPZ, Economic Processing Zone. That particular buyer would be registered for VAT here in Kenya. So they have a valid PIN here, and they also have a name. Of course, from the PIN is where you get the name. So in such a scenario, you will have some of your data. For those who are in exports, you can find here a PIN and a name. So that is from where we stand. I'm assuming that was maybe an EPZ transaction. There's also a scenario whereby, because now what has come to light with the VAT-Auto populated return is there's the aspect of you have done wrong HS code mapping. So you used the wrong HS code, you used applied on an invoice for someone who's not even in the EPZ, and it came in as an export because you used exports HS codes. And that is why that data has been availed in the same way, because that is how you transmitted it. Now, the declaration will still happen. So here for now, I'll temporarily, because I don't want my CSV to be distorted, I'll just randomly capture any pin. Like that. And then B is also mandatory, if I'm not wrong. Just a minute. Yes, B is also mandatory. When I say mandatory, it means the cell is not grayed out. That is what I mean, it's mandatory. So allow me just to capture anything. For both of them. And then save it. Now I'm ready to import that CSV under exports. There. Now, this was a temporary application. When I say application, I mean capturing of the pin so that my CSV is not distorted. So when it comes to the return, I just delete it, right? So if I did an export and the buyer is in a different country, for example, then the pin of purchaser is not applicable in such a sale. The only time you capture a pin of purchaser is when the export has been done, maybe, for example, in an EPZ, an economic processing zone, because that taxpayer is in Kenya. They are registered in Kenya in terms of their PIN and also their VAT obligation. So you will be expected to declare the PIN of purchaser. And for those transactions, that data has been provided for you. You don't need to pre-fill it. That one I know. It's just that for my test case, they didn't have an export that happened within Kenya, like in an EPZ. So maybe that is that the clarity I would want to offer. But basically, that is how you, for export specifically, that is how you prepare the CSV. So as much as we have auto-populated this CSV for you, to maneuver the message of that is not a proper CSV for that schedule, that is how you go about it. Ensure you capture the name of purchaser, which is column B. When you're dealing with the type of export as a service, I've selected service for column F. You capture it as a service, and then when it comes to the relevant paragraph, you choose depending on the category A, B, category D, E, and F. You select the category that aligns to that particular service. Now, if I was working with a good, the number of columns you fill are more. What happens? Let me just add a row. One. I've added one, so that now I show you the different columns when it comes to goods. For goods, you'll have to capture in your CSV the name of the purchaser. That doesn't change. The description of goods will be provided for you, so that's not an issue in the CSV. But you have to manually enter and capture the customs entry number. You have to capture the port of exit. You have to capture the destination country. And you have to capture column K. So that is for exports. I know for guys who had done, for taxpayers who did wrong HS code mapping and they have received exports and they've never had exports before, what we have been communicating in on this sensitization, you must declare them as is. You must declare the exports as is. Then now what you go back and do, you create credit notes with the same wrong HS codes. The same wrong HS code, so that it cancels a mistake that has already happened from the original invoice. Then once you have done a credit note using the same wrong HS code, so that now even in your data for December 2024, you get that reduction in your sales, you will now issue proper invoices, export invoices with the correct HS codes. So always remember, when you're issuing a credit note, it should be issued in the same manner the original invoice was issued. So if you issued an invoice without the PIN of the buyer, issue a credit note without the PIN of the buyer, right? So that you just don't have any challenges moving forward. Now, I feel like I've taken so much time on that. So I really wanted to emphasize on exports because I know the CSV files being availed require you to manually add some information depending on the type of exports, whether it's a good or a service. Now, let's move on to exempt. I don't think I had exempt, but for exempt sales, the procedure is the same. You import the CSV for exempt. You can adjust your sales up as well. Remember, we are also validating the total amount for exempt as well. You can adjust it here. So for section D, the only place you don't have a lump sum is exports. Export, you must import that CSV so that you don't have a challenge where the system is telling you that you need to declare a total certain amount in terms of sales for section D. Section D too, if you have exports, the CSV is not optional. It is mandatory for you to import so that you're able to file and your sales amount tally. Please take note of the same. So for exempt sales, I didn't have a CSV for it, but the procedure is the same and it's applicable, just what we've done in section B and section D1. Now let's go to F. This is where I want to really have a proper discussion with F, because it also brings out all the things we have done. Now, let me just open section F, local. Section F, type purchases are 3. Let me just go back to the return so that I can show you the same. Type of purchases are 3. There is local, there is import, there is digital supply. Remember the uniqueness of digital supply. The taxpayer who's a DST taxpayer must file their return for you to receive that CSV file in your auto-populated return. If at the point of you filing your return, they have not done their filing, then you will claim that DST transaction in a subsequent month, because DST taxpayers don't have a different filing period when it comes to their VAT return. But the beauty about it is that input VAT can be claimed in a subsequent return. If at the point of view now you're ready to file your return, you need to claim it, but they have not filed. But you can also have a conversation with them. You ask them or request them to do their filing so that you also benefit in claiming that input VAT in that particular tax period. Now for local and import, let me go back to my CSV. So this is my CSV. Let's touch on debit notes. I already touched on debit notes in sales. I've given you the workaround and how to properly declare those debit notes. Now we are in purchases. You have debit note in purchases. My data, if you look at row 5 here, up to 8, I have, these are actually debit notes. It's not an original invoice, it's a debit note. When this debit note was issued, it referenced an original invoice and the original invoice date, which is what you're calling the relevant invoice number and the relevant invoice date. Now, if I import this CSV the way it is, this particular rows will be flagged. It will not allow. So let me see. They're not many. I would want to just import it. I haven't done any alterations, just an idea. That's the pop-up. That's the pop-up that most of us are getting. As taxable value is a positive, relevant invoice number, this should be blank in following rows. And the system, or rather the Excel, gives guidelines on the rows. Remember, my debit notes were in row 5 up to 8. And those are the same rows that have been highlighted in my message. For the simple reason, in the return, any taxable amount that is a positive value should not have the relevant invoice number captured and the relevant invoice date captured. So what do? I'll just close it go back, go back to, it's even been highlighted, the specific places I have an issue, manually delete it as such. I've already done a manual deletion of the two because they're not applicable. And this is now the challenge you've been getting in purchases. Then I will save this CSV file and then go back to it and import. But now I haven't merged with imports. So let me just give me a minute. I merge with my imports. Just a minute, because ideally for section F, you're supposed to merge all your CSV files. So I've done the merging. So let me just save it again. I'll close. This is for the one for imports. So I'll just don't save. Yeah, so now I'm ready to import my CSV for section F. I've merged it. And there it is. So you can see the debit notes, which are preventing you from importing the CSV. Once you manually delete the the relevant invoice number and the relevant invoice name and date, it is no longer a challenge. Now, once you do that, what you have been encountering is when you go to submit or validate that, or rather at the point of submitting the return, the system requests you to declare the same debit notes by adding the relevant invoice number and the relevant invoice name. I'd like to officially announce that that issue has been resolved. We corrected it yesterday. So what does that mean for you? The data remain as is. In your CSV files, the data will still have the relevant invoice number and the relevant invoice date. You will still manually delete it exactly the same way I have done, but at the point of you submitting the return, the system will not request you to capture the same relevant invoice number and relevant invoice date for debit notes. I confirm again that has been resolved. For anyone who was encountering that as a challenge, please note we have done a relaxation for the same, and now you can comfortably submit your VAT return. Now, let's talk about credit notes. Now, for credit notes, the challenge you have been maybe encountering for someone who has been placed on the VAT special table, for example, what has always been the practice is you are not allowed to claim that input VAT. So even in your auto-populated return, I know what you have been doing is you have been removing them so that you are able to file your return. The challenge that you have been getting is on credit notes issued by the same taxpayer who has been placed on the VAT special table return. Now, I'd like to announce the same change, or rather implementation we have done. You will manually remove all original invoices, debit notes, and credit notes that have been issued by someone who is on the VAT special table. That is the solution. So we were saying that the credit notes are mandatory for anyone who has been placed on the VAT special table. Now we have removed that rule. We have relaxed that rule so that taxpayers are able to file comfortably. So you will manually delete credit notes that relate to someone who has, and the system will, even if you try to import, because I know you can't tell at face value who has been placed on the special table, it's at the point of you submitting the return that it tells you PIN number, this is not eligible for input deduction. So you go back to your CSV file, look for that particular PIN, all the invoices relating to that PIN, remove them in totality, whether it is a credit note, whether it's an original invoice, whether it is a debit note. So those relaxations have been done just to ensure our taxpayers are able to file seamlessly. We delivered it last night. So you should be able, if you can test the return today, you should be okay today. Now, the other item for credit notes, and I know this was unique to invoices for items. Now, assuming this was an items invoice, the challenge you are having, since credit notes are mandatory under purchases, the relevant invoice date had been aligned to the credit note date, which is here. So you would find that 13th November 2024 has been aligned to, for example, like now this one, sorry, this should not, this was a typo when I was working on the document. So allow me just to adjust it. Assuming this was an October invoice, for example, just assume that. So what you would find, because I know that affected specifically items invoices, the dates had been aligned. So it poses a challenge when you're trying to declare the same. Now, for that particular solution, what will happen, what we have delivered, that creditor is still mandatory to claim or rather declare under Section F. But the inconsistency on the dates between the relevant invoice date and the invoice date for the credit note has been relaxed. So that credit note will still go through. It will not pose a challenge at the point of filing. Let me repeat that, because those are three different issues I've addressed. I've addressed the issue of debit notes and how to go about it. I've addressed the issue of credit notes for taxpayers who have been placed on the VAT special table. And I repeat, the solution is to remove them from your CSV. The same practice you have been applying on original and debit notes, the same applies to credit notes for the purposes of filing the November 2024 return. Now, for the scenario where the relevant invoice date had been aligned to the invoice date of your credit note, which is what I was talking about. So for like this particular one, it's written 19th. Let me just change this, 19th. I was preparing my CSVs, 19th November, the date on the invoice is 13th. Now, the challenge you've been getting is that this date had been aligned to 13th. That has been a challenge for some of the credit notes. So what I mean is you will still be forced to declare it in the return, but the aspect or the mismatch on the dates for both the relevant invoice date and the invoice date itself will no longer be a stopgap in submitting in your return. So I'd like to encourage all taxpayers who had that challenges. I know we had given a workaround for sales on that issue. The workaround for sales was move that particular credit note to your lump sum. Move that particular credit note to your lump sum. Do not import it under B2B. That's the workaround. For sales, it's a bit different because you don't have a lump sum to move it to. You have to import that CSV. That credit note is mandatory as per the validation rules we've put in place. So now moving forward, that inconsistency or discrepancy between the two dates is not a stopgap. You will still be able to submit your return. But remember, you must declare it. For VAT special, it's different. You remove it. For this particular challenge on the issue, on the aspect of invoice date, you must declare it, right? Now, remember, I just want to echo the other conversations, or rather the feedback we've been receiving from taxpayers. You want to introduce purchases from a prior tax period. So you have purchases you didn't claim in October, you didn't claim them in September, you didn't claim them in August. As I wind up, you didn't claim them in August. Now, what will happen is what I am encouraging most taxpayers to do, you will find those invoices, how the actual invoice has been transmitted by the seller. The dates, or rather the invoice details, are different. And that is why you're encountering a challenge when it comes to introducing it. Remember, you will manually introduce it in your purchases. So by manually say means, if like now I had already imported my CSV, so I won't do that. So if I add a row here, I want to manually introduce an invoice, for example, from a prior tax period. I choose local, I capture the PIN, I capture here, and then now I capture the invoice number here. I would want you to confirm on the invoice checker that the exact same details you have physically are as per what is transmitted, because you need to declare that invoice as transmitted. And I think that is now the challenge most of us are experiencing when it comes to introducing input VAT from a prior tax. And then this is on purely on for the invoices that are ETIMS compliant. If we are discussing about invoices that are from our trader system invoice numbers, those one automatically are not valid and are not compliant. You will not be able to claim that input VAT. Go back, request for an ETIMS compliant invoice for that particular purchase so that you're able to claim it. But now for the people who have actual ETIMS compliant invoices, what I want us to emphasize on as a starting point is confirm the invoice details, because at what the seller did as when they gave you your invoice and what they did at when it comes to transmit are totally different things. I don't know what is going on with the discrepancy on invoice details changing, because you're finding I think I did an analysis for someone the other day where they were trying to introduce invoices for October, but the actual invoices were transmitted in November. So that same invoice has the invoice date for November, meaning it's already part of their purchases as auto-populated, and not October. So you're no longer introducing an invoice for a prior tax period because that invoice is for November. So let's just have a moment to ensure that or take that direction or route where we ensure that the invoice details are as transmitted in the invoice checker. So the invoice checker will give you guidance. Once you check, you confirm the invoice date is now at the same, then you can manually introduce it and the system will not reject. The only check we'll do is if you had claimed it in a prior tax period. So if you're trying to introduce an invoice that had already been claimed, the system will reject it and it will communicate the same in the error messages. So that's my comment for purchases. I believe those are the three major changes we have done. I don't think there's any I am forgetting on the same, but those are the major changes we've done when it comes to the last night. We've also done something in terms of just to address the aspect of missing of invoices today in the morning, just before we started this training session. And what we encourage for those who have joined a bit late is ensure that you have downloaded the auto-populated return again. Remember, emphasis on purchases. For you to receive this invoice in your data, or rather in the auto-populated return, your PIN must have been captured at the point of transmission. For those of us who are affected by the aspect of their PINs missing, please let's have a conversation with the seller to issue you with a credit note, or rather generate a credit note to cancel that particular sale. And it should be cancelled in the same way the original invoice was issued, which means it should be cancelled without capturing your PIN, and then now ensure in a new invoice that you will be issued, your PIN is captured. And once, if that is being done in the month of December, definitely, then it means that invoice will be available for the purposes of filing the December 2024 return and not the November 2024 return. So that is the key aspects I really wanted to touch on. The different messages you might be encountering. I can do also a walkthrough. I think I had closed it, if I'm not wrong. Just a minute. On the FAQ, but I would also want to just take questions directly on the different, because these are just basically the same system messages. You can see, let me just zoom in just to make it a bit more visible. You can see when you're dealing with the different sections of the return, when you're dealing with section B, when you're dealing with section D1 and exports, we validate the line items, which is now, when I say a line item, you can see serial number 224 where we have validated, or rather there was an attempt to alter the details as transmitted on that invoice, and then now the system communicates the alteration. It could also just be the aspect of you introducing a character, as I mentioned earlier, that is not allowed or aligned to the VAT-3 return for that particular cell, and that is why that particular invoice is being flagged. So it's important to check the two aspects: the aspect of using characters that do not align with the VAT-3 return. Our auto-populated CSVs do not have that challenge, but if you're using your own data to import in this in the VAT return, you could be introducing characters that do not align with our return, and it is important to check the same, because every other aspect of that invoice could be correct, but the issue could be the characters, the special characters you're introducing, lagging spaces, which affects now your return. So it's important to just look at that so that you don't have that challenge. So we will validate for section B line items and also the total amount. For the total amount, you will be notified if you are making an attempt to underdeclare. So the system will tell you that the total sales should be actually this amount. Like now in the what I'm presenting, the total amount is actually 99 million. So if you actually put any amount lower than 99 million in section B, it communicates the same. The same validation rules apply in section D1. The same validation rules apply in section D2. Remember, these are two different, they're in the same sheet, but serve a different purpose when it comes to zero-rated sales. So the validation will communicate clearly D1. It will also communicate clearly in D2. I repeat, D2 is exactly as section F. You must import that CSV. There is no field for actually capturing the lump sum amount, right? So remember that particular bit when it comes to section D2. I think with that, I have covered everything I wanted to cover. And maybe just to touch on, as I wind up so that we can have room for questions, because I really wanted today's session to really focus on the challenges so far, even the feedback we've received and how best to address it. When it comes to sheet O, VAT due, the amounts are already populated for you. So the output VAT is based on what you have captured in section B, section D, and section E, which are your sales for general rated, zero rated, and exempt. Input VAT is as per what you have introduced in section F. Section H and I usually doesn't have an implication on your input VAT because those are exempt and zero rated purchases, but the biggest implication is in section F, which is now for your for purposes of input VAT. And also, if you are a taxpayer who is trading in both taxable supplies and exempt supplies, then of course apportionment comes into play in this particular category. You can see serial number 16 and 17 are grayed out for the simple reason the return I have given a walkthrough. They don't have exempt sales. They only had taxable supplies, which are general rated and zero rated. So for this particular taxpayer, if I was to use this test case and file their return, which I cannot because all the data has been changed for purposes of the sensitization, what will happen is apportionment does not apply to them. However, if they had exempt sales, for example, if I was to change this and just put it at 3 million, I think that's 3 million, 30 million, sorry. If I was to capture 3 million in section E, which is exempt sales, what you'll notice with the VAT due, if you look at serial number 16 and 17, they are no longer grayed out because now apportionment comes into play, because now you're trading both taxable supplies and exempt supplies, and therefore apportionment will apply in this particular situation, and it affects the input VAT that is claimable when it comes to calculating your VAT position. We are also providing the total withholding VAT credits for your tax period, We are also providing the credits brought forward from the previous month. If you have it, it will be auto-populated. If you don't, then of course you have a nil entry. And then now, if you had any CAVs issued in that particular in the period in that particular tax period, of course the CAV amount will also be pre-filled. Again, debit adjustment vouchers will also be pre-filled in the return. If you had lodged a refund application, again, that amount will also be auto-populated for you to finally give you your position in terms of VAT. The vision is to have a web form of this, but we needed to start somewhere. So this is where we're starting at. And I would want to encourage everyone to really take this in terms of the changes that the authority is taking by pre-filling or using data that is already available to us in terms of e-Teams and Teams invoices, and also from ICMS when it comes to imports. I know there's an integration that is pending for export. Once we have finalized on the same, for those who are in the export business, their data will also be pre-filled. That's why right now, the aspect of filling out the CSV is a bit more manual. So with that, I would just want to take a break and take it back to my presenter, or rather, I think Ngao is one who's if I'm not wrong, Ngao is facilitating the same, so that we can see how best to address questions that are that have been posed in the Q&A. Thank you so much, and I appreciate you joining in and listening in. Thank you.
Hello. Good morning once again. If you have any question, you can raise it through the chat box, and we have a panelist who are going to handle it. Grace, I missed some place. Sorry.
The session, I think you're supposed to coordinate the Q&A session as well, so you can take that up and provide guidance. We can also invite our e-Teams office. I think Zainab was supposed to join. I don't know if she was able to join, so that we can first address any e-Teams related questions, as now I take a chance, or rather to go through the Q&A and just see unique questions that I would have to verbally address. And then I think we usually give our taxpayers an opportunity. We select our taxpayers, one or two taxpayers, to pose their questions verbally, and I'll be ready to do that in a few minutes, because we are still we have time to do that. Our session is supposed to end at noon. So let's facilitate taxpayers in terms of responding to their queries as much as possible, especially because the due date is tomorrow.
Okay, thank you, Grace. I would like to invite Zainab, if she is in, to give her comments. Zainab?
Yes, good morning, Gal. Yes, thank you. From my end, I'll say that we have done our level best to ensure that the system is actually working. And I'm very glad that Grace actually has taken us through all the errors and the possible solutions. And I think most of the issues that maybe might be coming up could be user challenge. But in case of anything, they should feel free to ask more questions so that they can gain clarity. Thank you.
Okay. Grace, we have a question on our YouTube page where somebody is asking, it's called Mercy Kaoya. What happens when the system says I should not declare less sales than other than what has been shown, yet my sales are not as much as what the system reports? Up to you, Grace.
Uh, thank you for that question. You said the name is Mercy. Her name is Mercy.
Mercy Kaoya.
Okay, so just to respond, and I think I touched it while I was doing a walkthrough of the return. The sales, for example, the system is communicating, even in the FAQ document I had displayed, the system is communicating as from where we sit, the items or teams invoices that we have received from your end are a certain amount. So let's say the amount is 500,000 or a million, or even 20 million. Let's work with that. So the total sales for general rated at 20 million. So what will happen is you cannot declare an amount lower than that. So Mercy, what I want to maybe just encourage you and direct you is confirm, or rather do a reconciliation, because now there's something I mentioned at the beginning about the aspect of taxpayers we have realized are actually transmitting duplicate control unit invoice numbers, and that is now affecting their sales in terms of inflating them a bit much. Some are quite high, some are not. Some we have actually agreed to declare the same, especially where there's a malfunction for their devices, and then now you're having their sales resend in the same tax period. We shall provide that a fix moving forward. But remember, what we want to deliver today is now for the cases that where that amount has been inflated. We're not saying all of them are that. That is the situation. Because I remember I had a taxpayer the other day tell me I didn't make that sale. It's a bit difficult to actually confirm that. It's not even an issue now of duplicity. You're actually even stating that that sale is not even yours to begin with. And the data and everything relating to in terms of the control unit number for that device is actually mapped to you. So again, for the situations where we have duplicate scenarios, we are actually working it. It's carrier taking it up on them on themselves to ensure taxpayers are not unfairly at disadvantage when it comes to declaration of higher sales amount, correcting a mistake that happened at source where multiple control unit invoices were transmitted to us, and now we are providing a fix where we shall drop the duplicate amount. So if you had transmitted 5 control unit numbers, we shall remove the 4 and retain the 1. So the fix is supposed to go live today, and then now we can properly file the return. So basically what will be done, the invoice details will remain as is. The only thing is we will update the taxable amount. So that is the fix we are working on. But I'm not saying it's a blanket response for all situations. It is a response for only the taxpayers who have confirmed from the sales that have been auto-populated in the return. There's a duplicate aspect of it if they do a comparison with their ERP systems. For some of us, the sales as populated is correct, is as is. And that is now the situation of where you need to declare the sales as populated for you. So if it's 20 million, the declaration cannot be done lower than that. You can only remember the rules for sales. You can only increase your sales, but you cannot reduce your sales. Back to you, Ngao.
Okay, thank you so much, Grace. I think Mercy is well answered. We'd like to invite our participants on the Zoom, and that now I'll allow Sami to ask a question. Hello, Mr. Sami, can you hear me? Sami Kinyanjui. Okay, if Sammy is not here, let me. Okay.
Allow me just to respond to a question that has come in from, it's on the chat. I can see we are oscillating between the chat and the Q&A. From Jeremiah Njimia, he sent a question. Morning, what does it mean when the system shows you this error? Please note that the total zero-rated export sales cannot be less than 67,700 as per Teams eTeams invoice. I've lost the question. As per Teams eTeams invoices. Now, Jeremiah, just to answer your question, it means one, in the VAT-Auto populated return, you have a CSV for exports. Let's begin from there. There's a CSV written section D2 exports. Those transactions amount to 67,700. As emphasized during the training, that CSV file has to be imported in the return. D2 is a bit different with how D1, section B and E works. There is no place where you can manually capture a lump sum. And therefore, you must import that CSV and declare those export sales. In the event you're not in the export business, for example, and that is the challenge you're experiencing, it means at the point of you invoicing, you use HS codes that are export based. And that is where the mistake is. And that is why the same data has been availed to you. So what do? You declare as is. And if it is an actual genuine mistake, you will go back, since you're the seller, issue credit notes with the same erroneous HS codes which are mapped to an export. Then once you have cleared all the credit notes for those particular sales, which are amounting to 67,700, what will happen is now you need to issue new invoices. Now maybe they were supposed to be under D1, zero rated, local. You issue new invoices with the correct HS codes. There's so much emphasis when we are dealing with HS codes for purposes of zero rated and exempt. We need to get it right at source. We need to get the correct HS codes at source before you invoice. Because the minute you invoice with the wrong HS codes, that is how your data is shifting. It is not KRA who's doing the shifting, not at all. The issue is at source where we are not getting it right when it comes to HS codes. So please ensure that that export CSV file is imported in the return so that now you address that particular message you are experiencing. Jeremiah, I've seen your follow-up question. I took guys through that particular part. The CSV file, when you open it, column A and B is blank, which has the pin of purchaser and the name. We are not validating the pin. So if, for example, you can put services as your type of export in your CSV, that should be aligned to column F. What will happen is once you import it in the return, you can delete the pin, but the name has to remain, because I know the system will request you for the name of the purchaser. It will actually make that request. You can capture anything because we are not validating. What we are validating is that particular invoice number, which you cannot drop in your sales. You have to import it and declare it as per your CSV. I hope that is well responded to. Back to you, Ngao, kindly.
Okay, I would like to invite David Busaule to probably answer one or two questions. David, are you with us?
Yes, yes. Am I audible?
Yes, you are very audible.
Okay. Thank you everyone who has joined the training. Thank you, Grace, for a very splendid and wonderful presentation. I think the only issue I see is people are asking questions, but actually most of the questions are being answered in the training. So probably, but just a few takeaways. I think we still see so many cases touching on sales, on purchases, and on credit notes. So just on a general aspect, we are at a way better place than February. I know probably someone had said, and that is the truth, because the number of returns we are receiving by today are way higher than the number of returns we received on a particular day in March, like today, or even the number of returns we received in October, or even the number of returns we received in November last year. So even without population, already the number of returns we are receiving are way higher. We are receiving more payable returns. We are receiving less credit returns. We are receiving less nil returns. We are receiving less zero returns. I think also on that aspect that on a daily basis, we are tracking the system and we are receiving higher returns even compared to last month on a specific date. So I think just to go into the system performance. So I think some of the challenges we might experience could be a bit localized, but if you look at the numbers are really speaking for themselves. Secondly, we are not saying the first month of rollout will not have challenges. And I think let's be clear on that and let's be honest. But if also we have honest members in the training, they will for sure. Okay, I know they can't probably say it publicly, but in their heart, if you were really in the pre-population in February before it was switched off, and you are now in the pre-population, so many things have improved. The ones who took initiative from the challenges they had in February, which majorly they were not KRA challenges, by the way. I know it looked like it was a KRA challenge because that's why we switched it off. That was not true. KRA switched off the pre-populated return on 20th March to allow taxpayers to sort out their data quality issues. So it was not more of us. It was more of you and giving you time to engage your team's device suppliers. It was to give your customers time to give them their PIN numbers, to just enhance this discipline that if you're buying from someone, give out your PIN number, whether it's a supermarket, whether it's a chemist, whether it's a petrol station. If you're going to claim input tax, it is the responsibility of the buyer to give the PIN to the supplier. And also the suppliers who are having issues with their team's devices, probably they capture the PIN of the buyer, but it ends up transmitting without the PIN of the buyer. They're also supposed to take action with their team's device suppliers, resolve those issues. I think generally for the taxpayers we've been interacting with, the ones who took initiative to resolve their challenges they had in February, they are way at a better place now. They're actually happier with the populated return. They're saying it has made their work less. And of course, that is also the reason why KRA kept on exposing the CSVs for you, even if you are not validating some of these rules Grace has just taken you through. The whole reason was for you to keep on checking, what does KRA have? What do I have in my system? Where is the discrepancy? What is the problem? Am I having suppliers who I'm not seeing their input tax? Reach out to them, realize maybe they're transmitting without the PIN of the buyer. So that was the whole idea in the last 8 months. And I think KRA stakeholders in ICT, E-teams, and BTO have worked tirelessly to make it better. We're not saying we are perfect, but we are having a better product than when we're in March. We are willing to work with everyone going forward with all your unique challenges, both the ones caused by yourself, which are the majority so far from the analysis we are getting. We are having very few KRA related system issues. I think the issue of the Safaricom invoices, that is probably something on our end, and a few issues on missing invoices for some teams and E-teams invoices. Those are probably the only main issues which are on the KRA side. But most of the challenges you are getting is either you are moving a sale from B2C to B2B, the PIN of the buyer was not mapped to the invoice. Of course, the system will reject. On the sell side, you are using the wrong invoice date. Apart from what is on the invoice checker, of course, it will reject it if you declare it on a line item. But also for the sell side, it is good to note that if you're having challenges declaring your sales on a line item, just drop them and declare them as a lump sum because it does not affect your clients claiming the input tax. So we allow upward adjustment of sales. We allow lumping up of sales. You'll never get an error message that please declare this invoice under sales. And of course, for purchases, again, it's more of a transition. Transition will come with certain challenges, which mostly it is exposing some of your suppliers and some of the invoices they're issuing. So it's a conversation we'll keep going. For us, I think we encourage everyone, take this as a lessons learned, perfect your invoicing systems, engage your suppliers who are causing trouble for you, let them sort out the issue so that December becomes a bigger turnaround for you. Come January, when you're filing the December return, those ones who never issued the correct invoice will have issued a credit note, of course, probably without capturing the PIN of the purchaser because it was transmitted without that PIN. They should have reissued a correct invoice. The buyer, so at least we kind of keep on improving because we really look forward. You can always share any challenges with them. And of course, we are still willing to keep resolving the issues we can resolve within our reach. But 95% of the issues you are getting from our analysis, they are not KRA related. They are issues to do with data issues between you and your suppliers. And that is the honest truth. we can't really come to lie, and we can't insist on a product which we are not sure about it. I think we are way more prepared now, right now, both system performance, both data quality, and I think it's a transition. We are not saying it will be a smooth rollout, but I think it's a worthy rollout for you to identify some of the gaps on your end and also improve. And also KRA, we are learning, and in December we'll improve the process. January will be much better. Believe February will be all systems go for everyone with minimal issues, because the awareness will be out there. Thank you very much for the few remarks. Back to Grace to continue with the Q&A. Okay.
It's not Grace, it's Ngao. I'd like to invite CPA Karanja to maybe ask a question. I see CPA Karanja, you are unmuted. Can you continue? Okay. Eric Haoi. Eric Haoi, can you? Actually, I'm looking at the people who have lifted their hands. They are people, they are the ones which I'm allowing to speak. Eric Haoi.
Good afternoon. Just
It's
need
morning.
morning. Can you clarify on the issue of imports? For those which are exempted, you move to exempt column, or you all lump sum it to column F for the imports?
Okay.
Sorry, Eric, come again with your question.
Can you hear me?
Yes.
Yes. I'm saying, can you clarify on the issue of imports? You have some imports which are paying VAT, which come with VAT, others and doesn't come with VAT. How do you treat them?
Eric, for imports, remember, the aspect of imports is very important. Imports, we have done the integration with ICMS. So number one, you cannot introduce an import that is not auto-populated for you. So I'm looking at it from where I stand. You've gone to ICMS, you've confirmed the status of that particular import entry. The status is either settled or removed. Now, if that is the case, we usually have a 1-day allowance to migrate that information from our ICMS system to iTax. So you would be availed the same import information in your CSV under section F, which ideally you would merge the two. If you have local, if you have DST, you merge all the CSV files and then import the same. But remember, there is the aspect of having it availed for you in the auto-populated return, because we are validating imports. The ones we're not validating are exports at this point. Those validations are not yet there in the system. That integration has not been finalized. But you should only be able to claim imports that basically, of course, general rated. If you're looking at Section F, of course, that is where 16% has been charged when it comes to the aspect of imports. I hope that comes out clearly. But remember, it has to be availed to you. That's important. That is actually very key. You cannot manually introduce an import that has not been auto-populated. For the simple aspect, unless it's for a prior tax period, that one is fine. But for the simple aspect of the integration between ICMS and iTax, we migrate that data for you. Similarly to how we are dealing with e-Teams and Teams invoices, you cannot manually introduce an invoice that has not been availed to you in the auto-populated return. It will be rejected, especially if you're doing it as a line item, it will be rejected. So it's important to also make sure that we have availed that information to you in the auto-populated return.
Thank you, Grace. I have another question from our YouTube KRA TV page. Where is the auto-populated VAT return doubling amount of certain sales invoices. We have multiple clients with the same issue despite capturing the correct amount. How do we tackle this? This is from Cleo Bulinda.
Allow me to respond. I wish they had specified which invoices are affected, if it's Teams or eTeams invoices. But just to reiterate the same, the issue is not about the amount that has been captured correctly. We are not disputing that. The issue is that particular control unit invoice number was transmitted more than once to KRA, which is now a device issue problem at source. So what KRA is coming in to actually correct and facilitate this issue that is happening at source is, once it is auto-populated to you, that particular, the invoice details, I know the particular invoice is appearing once, but the taxable amount is what has been inflated, and it has been inflated to align to the number of transmissions that control unit invoice number was actually sent to KRA. And that is the challenge most taxpayers are having, or not even most, a few, because I know just a few invoices have actually been affected. Because the outcry on the same issue would have actually been a bit more than what we have documented. So we are alive to this, but we are trying as KRA to resolve it for you on your behalf. But as we give you a temporary, because this is a temporary fix for November, as we provide a temporary fix for this duplicate amounts, we still need taxpayers to have conversations, as articulated by Mr. Busaule, with our device suppliers, and to narrow down and understand why. Because if you look at those particular from our database, they actually have a time difference with how they are transmitted. And that time difference comes down to even seconds of how it's being transmitted, or minutes. So that control unit invoice number is sent more than once, which is now what is attributing to the inflated taxable amount for a specific invoice. So for now, we, as just echoed before, we are working on providing a solution for you today. And then now your taxable amounts will be updated with the correct amount moving forward, so that you can be able to file your November 2024 return. But remember, this is a temporary fix being facilitated by KRA, but we still need a better solution to be provided by the taxpayers at source by having conversations with our device suppliers, because that is where the problem is. And we really need to have those conversations, especially because we are having a break for Christmas. Most people are breaking, so that your December invoices are also not affected, because you'll have the same challenge come filing of the December 2024 return, if not addressed at source and resolved at source. I would really want to emphasize that.
Okay, thank you, Grace. We have CPA Karanja. You are unmuted. Please go on. Unmute. Okay, Okumu.
Right.
You're unmuted.
Yes, my question is this. My concern is this. Can you hear me?
Yes, we can hear you.
All right. I'm requesting if I could get a reprieve in the month of November. My case is I have a number of invoices that I had declared in October, populated in November.
Thank you for that question, Okumu. Can I respond,
So I'm
please?
requesting the same can be removed after ascertaining that they were actually declared in October. They be removed so that I'm left only with November.
Thank you for that question, Okumu. I'd like to respond. Now, you're among the, I've seen that issue come, or rather that communication or challenge come from taxpayers. Now, Okumu, I would want you to look at the same invoices you declared in the month of October, run them through the invoice checker. Please tell me if those dates, the invoice dates, are not for November, because what we have realized, even with our analysis, as you transmit, especially the last day invoices dated October ended on what? On a 31st October, that mess is happening at the tail end of the month, where an invoice, what you declared, because as per your ERP systems, it was 31st October, but the actual transmitted invoice has the date of 1st November, and that is why the data has been auto-populated to you.
That could be right, and it is a mistake that could be either on my side or transmission or the device. I accept. But now that it can be ascertained, they were already declared. So can we not concentrate how they happened, but be asserted and be removed so that I'm only left with actual sales for November?
I was just getting to that part of my response. Now, unfortunately, since the basis and the baseline of the auto-populated return is on transmission, we cannot drop invoices. That's what already declared. We would be exposing or requesting the system to do a new check. And this is, I want you to paint the picture. Not every taxpayer has declared those invoices as a line item. You might have even declared the same as a lump sum in the October 2024 return, because not all situations are the same for all the taxpayers. Some imported the CSVs and declared them as a line item. Some declared the same invoices as a lump sum, especially for the taxpayers who have high volume invoices. I know they declared the same as a lump sum. So if your request is for us to subject the system to do another check on the declaration in the previous return for October, then that check would fail on the basis of lump sum. Because if it is a lump sum, we have no visibility. Remember, it's a declaration. So the check would be on the return, not on what is transmitted. So what is the way forward? The way forward, you will declare the invoices as auto-populated for you in the November 24th return. But the October 2024 return can be amended downwards to disallow the same sales, so that the 2 months are aligned. Because I understand your request, but looking at how the validations checks would be put in the system and looking at the timelines we have, it is not possible. Because of the aspect of sales, you have the ability to actually declare your sales as a lump sum. So if we're looking at your return and we have no line item visibility for lump sum, then how do we disallow the same in the November invoices that are being auto-populated? I know we had even explored that possibility, but the challenge of having the aspect of some sales being declared as a lump sum, which is what most of our taxpayers do, it is also posing a challenge. So the response is, and we have also encouraged TSOs in the aspect of actually amending those returns. Please amend the October 2024 returns, because there was an issue in terms of changing of invoice dates at the point of transmission, and that's not something on our end as KRA we can resolve at this juncture.
And would amending the return downwards be accepted in the system, especially if you are now declaring on the amended return is reporting a lower figure? Would the system accept that?
You know how that one would create a task. In such a scenario where there is a reduction of, depending on how your inputs were, if the reduction does not reduce your VAT liability, it's reducing your liability, then that is a task. If it is not affecting the VAT position, then that one becomes an automatic approval. So depending on the net effect on liability is what determines whether it creates a task when it comes to amending the return, or where it is auto-approved by the system. But for right now, that is the solution. Because I know the validation you're requesting, I know we cannot implement it for the simple reason some sales were declared under the lump sum. So we cannot verify it in the October return.
would those that were declared under line item then be tackled in isolation of those that went in as a batch declaration?
It is a possibility, but it is not something that we can explore on the 19th. That is the challenge, especially because 20th is fast approaching, which is tomorrow basically. And then now it singles out someone who it becomes an unfair solution for those who declare them as a lump sum, because the situations are there, those cases are there.
Because now I'll end up with a liability that is not right,
which has been adjusted
I'll
by
pay
amending
twice for what was. It would demand that I pay twice for what was already declared for under November.
But the excess credits carried forward would be realized upon amending the October 2024 return. The system corrects itself. By amending one return, it facilitates, or rather, it's the same way, Okumu, with the aspect of sales have been done, the PIN has not been captured, and then now I'm not in a position to claim it. You're issuing credit notes, even if it's an erroneous sale. The credit note is being done in a different tax period. So you will feel it in the period where you're filing that return, which is November 2024 for that particular sale. But the adjustment of that liability is felt when the credit note has been transmitted and in the December 2024 return. So it's an in-out situation where an adjustment in October will ideally facilitate what you're paying in November.
Grace, maybe just to also add to Okumu's concern, you realize, yes, okay. Fred, please mute. Fred, mute. Frederick?
Maybe Ngao can assist us with muting Frederick. Thank you.
I think Okumu's concern also is we are saying, yes, a mistake happened on your end. It's a mistake we cannot correct by the due date. We'll have wished to even correct it, but it brings so many issues of unfairness, as Grace has said. There are different scenarios around it. The first thing you need to do as you as Okumu, you need to align your invoicing system to the correct procedure. There should be no invoices being issued in November for October supplies. Again, that is an issue now on your end where you need to take into account those corrective actions. Second, we don't prefill invoices by transmission date. We still use the invoice date. So meaning, try as much as possible to align your trader invoicing system to the teams and e-teams invoicing system so that there is no gap between how you invoice within yourself and when you are invoicing using the CU invoice number. And the third thing is, when you file the amended return with the sales which were already declared, when you file the November return with sales which already declared in October, as you say, manually or lump sum or on a line item, and they're still being required to be declared in November, yes, that is just the requirement for you, trying to show that you are complying, but you can still go ahead and pay the correct taxes for November, and once the amendment of October goes through downwards, then of course I think I think these are the conversation now you can pick up with your TSO, and they should be able to understand during this transition period. I think there are solutions out there to help you as you move towards compliance, but also we request you to sort out the mistakes you are doing of invoicing issues of October in November. I think that one also you need to take corrective action going forward immediately.
Okay. Yeah.
So from hii list
Some Collins Masinde.
Thank you so much, Mr. Busaule, for that. And the second concern is, I realized we had a transmission problem with another device, which now means we are not going to even catch up with transmission for November sales. It's still way behind. Can we get a window to file for November because we have no sales at all appearing under auto population?
Busaule, would you want to respond, or I can respond? Okumu, just to respond.
Yes, please.
Yes.
Yes. Please just continue the Q&A. I think
Yes, but this is
just coming in.
Okay, just to respond to your question, Oku, as much as you're having challenges with one of your devices and you're having challenges in transmission, remember the beauty with sales that you can actually incorporate sales that have not been transmitted under your lump sum. So you're still
Okay.
able to file your VAT return. There is no stopgap to that. You just need to ensure that the sales as per what you have in your ERP system, because now you're having device challenges when it comes to transmission, are accurately captured. So if as per your ERP system, your sales amount to 15 million, then that is what you capture in the lump sum. Remember, what I emphasized on, when it comes to now your purchasers claiming the same invoices, that is now where they'll be negatively affected, because if you're not transmitting your sales, the same purchasers are not having the same invoices availed to them. So for you, the seller, you're able to declare. Where you will have now some explaining to do is now for your purchasers, your buyers, because those invoices have not reached to KRA, they have not been transmitted, and the same is not being availed for them for purposes of claiming of input VAT. But on your end, you're still able to file and declare. So there is no need to actually grant an extension for purposes of filing of the return.
All right, thank you.
You're welcome. We could take another.
We could take another question. Jeremiah Njimia.
Good morning.
Good morning, sir.
On export sales, once you have, you don't have export sales, but maybe from the feeding point it was wrongly posted, they go to export sales D2. When you come to approve the auto-populated sheet, it doesn't have the PIN and you don't have the category, destination, all those things. It only has the ATR number, the date, the receipt number, the description, and the amount. So when you input the data, let's say you add some, just a PIN, and you add a name and you fill in everything, and you go, now you are able to upload onto the sheet of D2. Once you have validated, it will validate. But when you come to upload, the system rejects. What should you do?
Jeremiah, when you say the system rejects, what is the exact error message you're getting?
The error message I'm getting, actually, I'm there right now. That's what I've been trying to do all through as we were in the meeting. And in the same, the system says those receipts are not valid. They are not on the e-Teams. They are not recognized from the e-Teams portal.
And you've said in your CSV file, the PIN of purchaser name was not included, right?
There are no purchaser names. There are no PIN. It's only the ATR machine number, KRA that number, then the date is there completely, the receipt number is there, the description that it is e-Team/team sales, and the amount, it's there.
Now, it's the same CSV I was displaying during the training. Now, when you import this CSV, what have you captured as the name and the PIN? Are you pre-filling those fields?
I've just picked one of the names, There's for that whole document, there's only one person who has a PIN and a name.
So is the PIN still available? Have you left the PIN intact in the return? The field for PIN, is it still filled?
Yes.
You see, you have imported this CSV so that it does not distort itself. I know what you have done. You have captured a PIN and you have captured a name. You have also selected the type of export and you have also selected the relevant paragraph, right?
Correct.
Now, the field for PIN, is it still pre-filled in the return? We have moved from the CSV in the return.
What do you mean?
You still have a PIN there.
From the original operator document?
No, in the return. I'm now at the return because I know you've already imported the CSV. That is what you have confirmed. Because if you're getting that error message, you're submitting the return. So have you still captured the field column A for PIN of purchaser? Does it still have an entry?
Yes, they are there. The one that I input is there. I remove.
Yes, remove. That is the issue.
All of them.
Yes, remove the PIN but retain the name. Retain the name but remove the PIN.
And the category and all that, and put
yes,
name.
Retain them. Retain them. Those ones are mandatory fields. It will not go through if you don't fill them. You must select the type of export. If you select services for that particular export, then you will only need to fill relevant paragraph, which is either category A, category B, category D, category E, or category F. You select. Now, if you select goods as your type of service, you need to fill the custom entry number, which we are not validating. You can capture anything. You need to fill the port of exit. We are not validating. You need to fill in the destination country. We are not validating, and the relevant paragraph. That return will go. But ensure the PIN, do not capture anything, because now what the system is saying, as per what has been transmitted, it is trying to confirm if it was transmitted with that PIN, which it was not. So don't enter the PIN, please. I believe that should address
once I've uploaded, I remove the PIN.
Yes, remove the PIN, please. Remove the PIN. Once it is already, you have already imported the CSV.
Okay. Then question number 2.
Yeah.
You find the system still asking for giving more errors.
That's a generic question. Maybe you could narrow down on the question, on the error.
Just a minute.
And I think with the interest of time, so that we also give room to more taxpayers, you could just ask your question, because our session ends at exactly noon.
You have 2 questions from YouTube. Dennis Rasungu Obui asks, our supply did not put our carry pin on the eating purchase invoice in the month of November, as the invoice is only bearing our names. What happens as I need to claim the VAT when filing returns? The second question,
claim it. Oh, sorry. Okay.
what do you do when some of your November purchases are missing in the auto-populated return? That is Dennis Kamau.
Maybe Ngao, you can assist us in muting, I think, Damaris. I think she's unmuted.
Okay, I've muted her.
Okay. So for the first question, the seller failed to capture your PIN. And I'm hoping you have consulted the same with the invoice checker, and you can see your PIN is missing. How you can tell? The field written buyer name is blank. We usually don't populate taxpayers' PINs on the invoice checker for purposes of data protection. So as long as the field of the buyer name in the invoice checker has your name, it means we have removed it from the PIN, which is a confirmation that your PIN was actually captured in that invoice. Now, unfortunately, you are not able to claim that input VAT, because as long as your PIN is missing, in the backend, when the system is now preparing your CSV files and your invoices, we have nothing to pull to reference it from. So since we use your PIN as a reference point in preparing your data in terms of invoices, we are missing that. Therefore, it is not claimable in November 2024. What you need to do, liaise with the seller to issue you with a credit note. Again, the credit note should be issued in the same way the original invoice was issued, meaning they should not capture your PIN. Then once you have been issued with a credit note, now it cancels out that fast sale. Let them issue you with a new invoice where your PIN has been captured. And since all that is taking will take place in the month of December, or maybe if they've already closed for they've gone for their Christmas break, you'll be having this conversation with them in January, then it becomes claimable in the tax period where they have been issued. So the credit note will be claimable in the month of December if issued in December, and the new invoice will be claimable in the month of December if issued in December. What was the second question from him?
From Dennis Kamau.
Yeah.
Dennis Kamau is asking, what do you do when some of your November purchases are missing?
Purchases.
Yes.
I would want to understand why they're missing. If they're missing because of what we just talked about, where your PIN was not captured, then it already explains it. Again, if your PIN was not captured at the point of view that invoice being issued by the seller, definitely you will not get it in the auto-populated return. I know there has been a sort of an aspect of where some invoices have been missing, and I know we have corrected that today. So maybe just, Dennis, what I can encourage you, just log into your iTax portal, download the auto-populated return, because since the solution has been delivered today in the morning, for those who were affected in the scenario where even if you check in the invoice checker, you can see it's transmitted, but it's still not yet available in my auto-populated return. Just download the auto-populated return again afresh, so that now you can confirm that the invoices have been availed to you. Remember the other important aspect of the auto-populated return. We update your invoices on a daily basis. So what that means,
haiwezi kuwa ni wifi zote ziko na shida.
What that means, Angao, kindly assist in muting. What that means is, if you downloaded your auto-populated return on 1st December 2024, for sure, your data is not the same as at 19th December 2024. We have a system where we incrementally avail invoices to you every single day. That batch process usually happens at night. So once it has updated your invoices as we receive them, so the invoice checker will give you the position or the status of that invoice on a real-time basis. The auto-populated return will update the same invoice that you have visibility of in the invoice checker the following day, because that is how we have put it, because of integrating two different systems. Remember, yes, both systems belong to KRA, eTIMS, and iTax, but the integration of the same usually takes a day in availing the same invoices in the auto-populated return. This applies to eTIMS and TIMS invoices and imports as well. Maybe the next question.
Thank you. The next question from Johnson Musioka on KRA TV YouTube page. I have purchases appearing on the auto-populated Excel, but when I upload it, it brings an error of invalid input VAT.
Invalid input VAT, or a certain PIN is not eligible for input deduction. I don't think we have a system error that says invalid input VAT. So I will work with the assumption that it is a certain PIN is not eligible for input deduction. What that means, that taxpayer has been placed, that seller, now this is a seller because you're claiming from them, has been placed on the VAT special table. And what that will mean, that input VAT is not available or claimable by yourself. So it's not a new phenomenon that has come up with the auto-populated return. It has always been there with the VAT return. So ideally, what is supposed to happen, you're supposed to remove them from the purchases and import that CSV again. That is the solution, and that also applies to credit notes that have been issued by the same taxpayer in the same special table. So you will manually delete them from the the CSV files we have provided for you in the VAT-Auto populated return. Manually delete them, then claim the input VAT that are actually eligible. Next question.
Okay, let me unmute Dennis. Dennis, you are unmuted.
Yes, good morning.
Good
I
morning.
have a concern when using the auto-populated data from eTeams, you find the sales amount is higher than the actual sales. And from what we have just been told, it's not possible to downscale the sales. What do we do in this scenario?
Who was posing the question? Is it Dennis?
Yes, Dennis.
Dennis, as we have touched on it.
Yes.
Let me ask: is it a Teams or eTeams invoice? Teams is the one that is purely numeric.
eTeams.
eTeams.
Yes.
So we have taken note of the same, and I think the issue is, I think even with that particular invoice, did it have more than one item?
Yes.
Yeah. So the invoices that are currently affected with that scenario are the invoices that had more than one item and had different item classes. For the guys who are on Teams, I know you understand that kind of language. So we are working on updating the same invoices. I know we have said you cannot reduce it downwards, but the delivery for that solution is supposed to go out today. So kindly bear with us, be patient, and the same will be confirmed and communicated to you once the solution has been done. Because like for today's sensitization, we have updated you on the solutions we've provided. And for now, I think most of our taxpayers, especially for purchases, because I know that is where the stopgap was in terms of filing the return, that has been addressed. So just for that particular scenario, Dennis, allow us to just provide a solution for you today, and then now you will be in a position to file your return with the correct.
Hello, this is Collins. This is Collins. Hello, this
I
is
don't know
Collins.
if Dennis was done, then we move to Collins. Yes, Collins.
Okay, this is Collins. I would like to question this. If at all I'm using section B to file, then the invoices are somehow undervalued. Should I upload the CSV, then remove the undervalue part, then file it in a lump sum amount? Will it allow?
Undervalue how? Have we auto-populated the undervalue? Is this Nini?
Yes.
Not from Safari.
Yes, you have underpopulated. You have underpopulated the undervalue value of the invoice. And so I was requesting, can I upload it, then remove it manually, then I put the correct amount in the lump sum?
Yes, you can, but you need to also remove the affected invoices from the CSV you're importing. So you're importing B2B, right? But
yes.
Some of the invoices have been understated, correct?
Yes, correct.
Now, manually delete them from your CSV for B2B. Then adjust your lump sum with the correct taxable amount, because for sales, you can increase. That is not a problem.
Okay. And somehow I keep on getting an error message that the invoice is not in eTeams. Yet when I go to check on my eTeams, it's there for this period. So I'm wondering, why is it that I keep on getting this error message that the invoice is not in eTeams? Even if I remove them and I put them in lump sum, I still again get some other invoices that they are not in eTeams. Each and every time I get the same number, 201 invoices are not in eTeams. Why?
Let me ask, the error message, is it a specific invoice number this with invoice date this, or is it relevant invoice number this with relevant invoice date this?
Yeah, it's relevant invoice this with relevant invoice date. This is
so
not.
Those are credit notes. So this is what I want you to do. All your credit notes under B2B, move them to adjust the amount and because I know you'll have that challenge when you're dealing with debit notes that were transmitted with a relevant invoice number and a relevant invoice date. You will have that challenge with credit notes where, especially for e-teams, where the invoice date for the credit note was aligned to the date of the relevant invoice date. So if the error message is specific to relevant invoice number, this, and relevant invoice date, this, that it is referring to a credit note. So remove all those credit notes, move them to the lump sum. Remember, it's a negative, right?
Yes.
If it was a credit note, adjust it with the negative value. If it was a debit note is a positive value. So you adjust accordingly depending on the taxable amount. Because remember, we are validating the total amount of the sales. So remove them from the B2B CSV you're importing, and that issue should be resolved. That one I'm sure, because the taxpayers I have worked with in terms of filing their returns with that situation, they were able to file seamlessly.
Okay, thank you.
You're welcome. Next question, please, as we only have 8 minutes left so that we wind up.
I'd like to invite Veronica. Veronica, can you kindly unmute? Okay. What about Farhan? Okay. Since they're not asking, let me go back to KRA TV. We have.
I'm here. I would want to ask a question.
Okay.
Kindly.
Go on, Sosian.
Good afternoon. My name is actually Daniel. I have an issue with an invoice in my input VAT that was declared by a supplier. But when I tried to upload my return, I got an error that the invoice, I have to declare the invoice. And then I went to the invoice checker, and the response I got is kind of confusing because the figures I have are different from the invoice amount. And actually, the figures I have, sorry?
Can I ask who the supplier is if you don't feel like it's an intrusion?
The supplier is from Nanyuki. The name is Nanma.
Okay, so it's I thought it was maybe Safaricom, because I know that challenge is out with Safaricom invoices.
Yeah.
Is it an e-Teams or Teams invoice?
It's a Teams invoice.
Teams. So
Yes.
So I think even just borrowing from what the guy, I think Collins had, was it Collins? Yes. I know for them, they'll be able to adjust the sales, but I know there's some specific invoices that have been affected in the sense that the amount is lower. What has been auto-populated is lower? Is it
Actually,
lower, Daniel?
it's higher, and the issue I have is that I have a tax amount. If you want to get back to the taxable amount, the figures don't make sense. Yes.
So it's higher. So it's the aspect of they're being affected by the duplicity. So the seller, when they were transmitting that particular control unit invoice number, they transmitted it more than once. So if it is higher, I'm assuming it's either double, triple, 4 times, 5. It's a specific multiplication.
Actually,
so if
it's
it was
not.
supposed to be, it's not.
Actually, I can give you the exact figures.
Mm-hmm.
Because on the invoice, I have a tax figure of 41,008 shillings.
41,000?
8 shillings.
Mm-hmm.
And
Any cents?
Sorry?
Any cents?
Yes, 0.25, 0.43.
Uh-huh.
And then on the invoice checker, I have a figure of 42,436 shillings and 25 cents.
And it's not an e-Teams invoice, the one that starts with KRACU.
Let me just confirm. Not really.
They're all numeric.
Yes.
Okay, so it's Teams.
Yes.
So invoice checker has a higher amount, but you have lower.
Yes, and then the other problem is the taxable amount. If you want, I would assume if you want to get back to the taxable amount, you take the tax amount, probably divide that by 0.16, and it gives you the taxable amount. But the figures don't make sense.
Okay, so I want to say, can we, I don't know if do you have access to anyone in your account manager? You escalate that particular invoice for further analysis. I may not be able to, because I don't have access to our database here. I do an analysis, then we can guide you on the way forward.
All right.
That's okay. But you can also share it with our, if you don't have access, because I don't know why most taxpayers have that challenge of account managers. And if eTeams operations will allow me and give me an allowance of the same, you can forward it to teamsupport@kra.go.ke.
I will do that right away.
Yeah, kindly. Then we can pick
Teams,
it up and
so sorry, you said team support?
teamsupport@kra.go.ke.
All right.
Yes, thank you.
I'll share. Thanks a lot.
Okay. I think we have room for one more question.
Yes, one more question. Aman Yator is asking, how do you claim invoices for prior months which are within 6 months? That is October 2024 invoices.
Okay. Now, one, you have to manually capture the invoice under Section F, because I know that is where I know there isn't so much emphasis on exempt purchases and zero rated purchases. So we're looking at general rated so that it adjusts your input VAT. You have to manually introduce it, but remember it has to have met the requirements. One, that invoice must be an Teams compliant invoice. Two, your PIN was transmitted with that invoice. If your PIN, even if it's an October invoice, was dropped or left out by the seller, it is not claimable in the November 2024 return. We need to also emphasize on that. There is also a possibility a PIN was captured, yes, but it was not a valid PIN, meaning that PIN is not anywhere in our registry. It's an invalid KRA PIN. So in such a scenario, of course, definitely that invoice cannot be mapped to you. It has been mapped to an invalid PIN. So what would happen in such a scenario? Have a discussion with your seller, let them issue an invoice, not an invoice, a credit note canceling the same invoice, and then issuing you with a new invoice. But ideally, the second other check I want you to carry out is pick if it's an Teams compliant invoice, pick the invoice number, run it through, validate it through our invoice checker, confirm that the invoice details are as per what you have, because what we have realized from the analysis we've been doing in the past 3 weeks is there has been some inconsistency on the details of what you were given and what was transmitted. So you'd claim it based on how it has been transmitted, not what you have as a hard copy back at your office. Ensure it is as per the details captured in the invoice checker, kindly. So if it is genuinely an October invoice, then the invoice date in the invoice checker will be for the month of October. The taxable amount will also be align to the same, and of course your details. You can of course manually capture that. That would be my guidance for claiming input VAT for a prior tax period. And then I'm seeing a lot of questions on, I don't know if we can pick one more, but we are out of time. Maybe Ngao, you can advise?
What I can advise is we have the panelists who will also respond to each of the questions which has been addressed in the chat, webinar chat, and then we can close the meeting with your final statement.
My advice would be, for scenarios where we have an aspect of duplicity, remember, duplicity affects two ways. It will affect the seller because now we have the aspect of some of the control unit invoice numbers being overstated, and then for the purchaser who have a higher input VAT to claim. For those of us who've already claimed the excess input VAT, what I can say is once we are done with the filing season of November 2024 return, a system implementation will be put in place to disallow the excess input VAT that was claimed and was not valid. However, for those who are affected with the duplicity aspect on the sales, we are working hard around the clock, because even if you see at the solutions we provided yesterday, the team was working up to as late as midnight to ensure that the solutions are available for you. So I know today is going to also be a very long day for the team that is monitoring the auto-populated return. But with the proper guidance on the challenges you are experiencing when it comes to sales, and the guidance we have provided on how to treat your debit notes, your credit notes for sales, and the solutions provided, which was, I think, the biggest outcry when it comes to purchases. These ones are for sales, there's a workaround. For purchases, the solution is now available in production. We encourage everyone to file their returns before the due date catches up with them. The auto-populated return is, I know, as just as Mr. Busaule has said, with everything new, there is some teething problem with every new product. Even if a different company was to avail a new product today, you'd actually have we're given an adjustment period, a grace period to adjust to the new product. So, of course, with the first month being for the November 2024 return, and it is a much, much, much better in terms of filing experience for taxpayers compared to what we had in the March 2024 return, filing return, and we took a lot of lessons from it. We went back to the drawing board, even just having engagements with associations like RETRAC and CAM members as well, and also ACCA. We have been having those discussions through and through over the past few months, and picking up on what we need to provide. I know this is not the final product of the VAT return. We have a much more simplified VAT return that we would want to now unveil in the year 2025. We were looking at by end of the year, but I feel like we need to actually avail it a bit earlier. So with every transition, there are teething problems, but after a few months, maybe 3 months, it gets a bit easier. You get a bit more aware of how to even address the system messages that you keep on encountering. So I just want to encourage all taxpayers who have joined today's session. We want to thank you. We don't take the 3 hours that you have given us in terms of addressing your questions in both the Q&A platform of the Zoom Zoom platform, and also verbally as well, those who've been able to unmute themselves and pose the questions. So let us engage where you're having challenges that you cannot address on your own. Make use of your tax service stations, and then also your account managers, and of course also our designated offices when it comes to e-Teams operations as well. So with that, with those few remarks, I want to thank my colleagues who have heavily supported in the responding to your questions on the chat. David Busaule, Fiona Lee, and also our team from the e-Teams operations, Zainab Kadenge and her team. I don't take your support for granted. And once again, thank you so much. We will have another session in the afternoon from starting 2:30 to 4:30. Where my colleague will be addressing and also taking you through the same. The sessions from yesterday are open to all taxpayers. They're not specific to any tax station. And then we do this all over again tomorrow. I'll be your presenter again tomorrow morning from 9 to 12. And then our final session from 2:30 to 4:30. So the goal for KRA is to walk with you in this journey to the very end. And believe me, you're not in this alone. So thank you so much for the taxpayers who've already filed their returns. We really appreciate you actually even doing this very, very early, picking up some issues quite early. Some were even addressed the first week of the month, and I think you're not even aware of that bit. But for the guys who now even participated or even gotten a feel of the VAT auto-populated return as early as the public notice went out, which was from now the 4th. We thank you so much, and we appreciate you as we walk this journey. So thank you so much. Back to you, Ngao, and from me, that's it.
Thank you so much, Grace Gedea. We'd like to also thank stakeholder engagement at Tax Education. We'd like to thank the viewers, especially the YouTube viewers. We have a KRA TV YouTube page where we like the members here to like and subscribe. I've seen people asking about questions about filing. We have all those videos on the KRA TV page, YouTube page. So I would like to encourage anyone and everyone to visit the page and see all those videos. Again, thank you so much. I'd like to wish you a nice day and a good afternoon. Thank you.